Hello and welcome to ProElliottWave.com video analysis for November 6, 2013. We hope you enjoyed this session. First of all, let's get started with some of the legal issues. This site and services and the video analysis that we're providing today for you are for educational purposes only. Investing in securities, Forex, and futures market carries a high degree of risk and you can lose all your investment money. All opinions expressed and data provided herein are subject to change without notice. The services offered by us may be suitable for all and may not be suitable for all investors. This material is not intended to provide and should not be construed as providing individual financial, investment, tax, legal, or accounting advice. You should consult your professional advisors prior to acting on the basis of the information herein. For further information, please contact us at ProElliottWave.com. Okay, well, let's dive right in. As you know, we do video analysis for the Elliott wave counts on currencies and other markets. This one in particular will carry the currency markets of the euro yen, US dollar versus the euro, pound dollar, Swissy, and the pound yen. And before we get started with our analysis, I want you to be aware of some of the key dates coming up very soon. Tomorrow at 5:30 Eastern, actually it'd be 8:30 Eastern, 5:30 Pacific time because we're in Los Angeles, we will have the UCB press conference and the unemployment report. Along with that, at 4 a.m. our time, you will have key economic reports coming out for the pound, and there are some for the Eurozone and Swissy. So be careful of these time zones and be aware of your trading, because during these times, a lot of the Elliott wave counts, even though they're usually very accurate, they either tend to be very fast during those times or exaggerated. And sometimes they completely change because of the momentum of the market. So let's get started right away with the euro yen. We always start from the weekly and we go down to the 15-minute chart. Just based on the weekly chart, you can tell that we are in a very bullish run starting from July of 2012. We have completed the 1, 2, 3, 4, and we're currently in the midst of finishing our fifth wave of this very bullish run. I would like to add that the fifth wave, from what it seems to be happening, is forming in a diagonal, ending diagonal pattern that you see here as we zoom to a daily chart. So we can zoom in better and take a look at it. You'll see after our 4 was formed, now we're starting this leading diagonal, 1, 2, 3, 4, and now we're working on the 5. Some people may argue that we have formed a 5 here, and this was the end of our wave. However, I'm not in that camp, and I believe that this was just the A of the B to the C of the fifth wave. Now, depending on the momentum that we'll see in the next couple of days, we'll see if I'm correct and this count is valid. Once we pass this point of 131.146, this count will no longer be valid, and we would have to count this as the end of that fifth wave. However, for now, if we zoom in, you'll see that the pattern count is pretty accurate and works pretty well until we see otherwise. We have completed an ABC to A and an ABC. Now here, we could argue that this was the end of the B run and we'll go up from here, or there might still be some action down below where this B is formed into a bigger ABC. So we'll have to wait and see. But if we zoom in even further, you'll see that we had a clear ABC pattern forming with a 1, 2, 3, 4, 5 impulse move to a triangulated B and down to an impulse move for the C. This could be an A of the a bigger A or a larger cycle A, and then go up to get a B and then come down to get a C for our B wave completion. However, I think we were done here and we are looking to go up. Now, how this pattern works, we should see, and as I mentioned earlier, we will have some economic information coming out tomorrow that could greatly impact this and other currencies. So we can move down to the 15-minute to take a look at what's happening at this point. However, the 15-minute I rely less on because you need to be able to see it from a broader perspective to make sure that you're seeing the right wave formations. And here, just as a start, I believe we've just formed an A of the final C by doing a 1, 2, 3, 4, 5, a leading diagonal for an A, B, C completion here. For now, I would be very careful. I believe this is going to come down, and I think it's going to come down somewhere into this region. You have a major trend line following this overall ending triangle, ending diagonal, and the 100% of it seems to be right at that number for this ABC. So it has to end somewhere below here, and that's why I marked it at the 78% Fibonacci retracement. Now let's move on to the euro dollar. If we look at the weekly chart, I believe in the bigger picture, we are moving in a large A, B, C pattern. Let me move it to the monthly so you see the bigger picture as I'm talking about. I believe we're doing an A, B, C, or an alternative count, which actually I like better at this point, which would be a triangle for this third wave, and this would be A, B, C, D, somewhere terminating in here and coming down to an E before we go up. If we go in and zoom into the daily, we see that from the lows of, again, July of 2000, actually we should go further back. We made lows at around July of 2012. From there, we have done an A, B. This B was set in July of 2013, so about a year for that cycle. And now we're going up to get our C. I believe we have recently formed our A top over here, and we'll come down to form a B to a C to form this alternate D. Now the timing, as you can tell, it took a very long time for this to form, about a year to form the B. So to form the AB. So I would think we have a good time, another good 3-4 months minimum to see the end of this pattern. Zooming in, you'll see that from the B, we have done an ABC so far. Now this could completely change, and instead of an ABC pattern, you might see an ending diagonal pattern where this would come in, and that could make a lot of sense because you already have an ABC here. So ending diagonals usually form with a corrective wave, a 3-wave inside of them. And if you want to get more information about all these rules and regulations, I would move back to our site, and under the Elliott wave analysis tab, Elliott wave basics, you'll see all these patterns. Now what I'm talking about right now and mostly concentrating on today, because most of these patterns seem to be working in that sense, is this ending diagonal pattern. 1, 2, 3, 4, 5 with these midterms or the fractal smaller nature of it being the ABCs. If you see triangulations in all of these forming. So I believe that we are, there might be a chance that this is that pattern as well. However, I want to stick with this primary analysis that I have here by saying that we formed an A and we're about to go form a B. Now, where we formed this B, we'll see how this works. I believe right now we're forming the A to go to a B and then come down to a C. And this is going to happen in the next couple months, this formation. Zooming in to the 4 hour, I would, I'm going to pause the video till this comes up. Okay, right back up. This pattern was ended last week, which we called it almost by a few pips here and there. We called out this top A, and if you can see, we are retracing back to the B, which is very usual wave count formation, where we correct to the previous 4 or the B formation of the previous wave. And in here, we've already formed 1, 2, I believe 3, 4, and we're going to come down to a 5. If we zoom in, we'll see this formation a little bit clearer. And as you can tell, it's still unknown. So therefore, I'm not going to be relying on this and wait for these patterns to be forming before we can be sure that this is exactly what's about to happen. What I like to make my trades on is actually waiting for all these a place where you have a convergence of all these theories and all these wave formations and Fibonacci counts to come together. And when the synergy of all these come together, you have a much stronger wave formation. And looking at the crowd, they will form and act on these points of the market where you have these convergences, along with all the technical analysis where you would get divergences, where, for example, here you could see just a little bit of divergence forming in our stochastics, and that definitely helped out with some of these decisions and some of these people taking these that point. For example, if you go in and get a ratio analysis of the C versus the A wave, we ended almost exactly at 100% Fibonacci count, just off by less than 30 pips, 20 pips, 20, 30 pips. So these things work very accurately, as you can tell here. Now let's move on to the US Japanese yen. I believe that, again, around November of 2011, we formed a low, and right now we are on a bullish run and taking a sort of a sideways action to form the 4th wave, which I believe it could be an A, B, C, D, E, but the action hasn't been that. So I'm assuming that we have an A forming a B to come down to get a C of the 4th wave. I'm going to pause this video at this point, and I will start another video as part 2 of our analysis for the currencies.